Okay, a quick review of small caps. That's ticker symbol IWM, the ETF. I really do think in some ways this is one of the keys to the market. So this is the monthly chart of that ETF. And you can see starting at about, let's say, the summer of 2018, this thing really went nowhere. I mean, it actually went lower if we weren't going to be specific, right? Like from that point, it just kind of trended lower, right? And then we had the COVID crash, obviously, and then since then there's been a rocket launch. Like, what is this increase? Like, let's just say from this candle to like here, we went up 120%, right? But then we stalled out. Like, we've just been in this disgusting choppy range, and then this is where it gets interesting. Now, keep in mind, and I'll do a separate video on this, but it's important to keep in mind that candles change over time before they're finally formed, right? And this is a monthly candle, so it was formed over the course of 20 trading days, so it looked different at different points. This huge upper wick here means at some point this candle was a beautiful bright green, right? How do I know that? Well, this is a red candle, which means this here is the open, right? The top of the body is the open. So this candle opened here, and then it went up, right? Like it went whoop, like that looked really bullish. Like that was a breakout. Everyone was talking about it on FinTwit, and then it failed. It went all the way down here and closed here. Then this next month you had follow through. So at some point, again, thinking about that same principle, we opened right around here and then we just went lower. So this was bright red at one point. We then recovered, which is why we have this wick. We had a little rally and then we came down again in January. So next month we're going to open as an inside month, and we'll have to see, does this resolve higher or lower? I'm suspecting possibly higher, lower, just given the like how close we are to the lows. But if you zero in on the weekly chart and think about where we are in the cycles, this is important because this index is not in sync with the S&P 500 and the NASDAQ. And so last week was actually week 27 for IWM, whereas for the NASDAQ and S&P 500, it was actually week 16. And so this is much later in its weekly cycle. And so this decline looks much more likely as an ICL. So another way of saying that is, it is there's it seems more likely that this is an ICL last week than it was an ICL for S&P 500 and Nasdaq. But who knows? Maybe this is leading the market, and this is telling us that we've bottomed for sure. First thing we'll want to see is a weekly swing low. We don't have that yet. We will have that when we go above the high from last week, which was 203.55. And then we'll want to see a progressively recapturing each swing high, like each of these weekly swing highs, one after another. If you look at the daily chart, you can see that, the same way that last week was probably an ICL, it was almost certainly a daily cycle low. So most likely a daily cycle low on day 38. But look how much lower this daily cycle is than this one and these other ones. So it's clearly a failed cycle, which generally means there's probably more downside. That you can kind of think of this whole extension. We're getting a little bounce here, and maybe we get another drop to kind of complete the picture. But again, it's totally possible we've bottomed. This is actually leading everything else and telling us that we have. So we'll be watching this instrument very closely. And just for frame of reference, we have this huge gap from November 9th, which was the day that the first news about vaccines were released. It was a Monday, so we have a gap on the weekly chart, right? Because we gapped up Monday morning. Actually, a lot of individual stocks have this same gap because the whole market gapped up that morning. And so if things get really nasty as we go into this YCL, very likely that we come down and close this gap. Doesn't mean we have to, not even necessarily the base case, but something to be aware of. We could find ourselves in the 168, in the high 160s, the sort of scene of the crime where this gap was left behind. I mean, and when I say November, I'm talking November 2020. So this is a gap that's like 15 months old. So we'll have to see.